What is going on, everyone? Platinum Beast coming at you with yet another video today. Today we're going to be talking about how timing the market is not nearly as effective as time in the market. So I'll explain that a little bit more, but without further ado, let's get into it. All right, everybody. So, timing the market versus time in the market. All right. Everybody wants to get rich from stacking precious metals. You go online, buy silver now. You watch TV, buy silver and gold now. You watch whatever media form, emails, social media, whatever the case may be, and you're bound to find somebody saying buy precious metals because they're going to the moon or it's the best investment or whatever. And you may think it's the best investment, and I don't necessarily disagree with you on that. But today I'm going to be talking about time in the market versus timing the market. And this especially pertains to platinum, my favorite precious metal. So basically what I'm talking about when I talk about time in the market versus timing the market, and being from the South, we usually don't add that G on the end of any word that ends in ing. So time in and time in sound kind of similar. So if I say timing, it just is what it is. Anyways, so timing the market can be difficult, especially with precious metals, because you never really know what's going to happen day in and day out. You might wake up one day and you see it go up pretty substantially, or you might wake up one day and you see it go down pretty substantially. So with that being said, timing the market never really works. It works if you are a precious metals dealer because you're moving so much product that pennies on the dollar slowly add up to dollars, to tens, to hundreds, to thousands, to tons and tons of profit over time. But you're really only making pennies on the dollar per thing that goes out the door, right? And so that makes sense from a dealer standpoint, but from an individual standpoint, quick flips ain't really the game you want to be playing if you're playing in precious metals, all right? So you need to make precious metals a long-term game. So that's why the phrase time in the market versus timing the market actually works here, because time in the market can prove to be much more beneficial than trying to time the market perfectly up and down and flip in and flip out and flip in and flip out. Right? If we look at the historical chart for platinum, what do we see? We see a slow and steady growth over time with some major dips in there and some major shoot ups. If we look at all the other precious metals, they're fairly similar as well. They move a little differently though, so don't think that platinum and gold and silver are all the same. I personally think platinum's a little bit different and I believe in it a little bit more. But what we see from that chart is the slow increase. Now, you can still, even stacking platinum for a very long time, get out at the wrong time. You need to know roughly the price you paid for the metals that you have, and you need to know that you don't want to exit at a time where it's less than whatever you put into it, right? So take, for instance, this quarter ounce Platinum Eagle. This I bought for $340. If I were to sell this, I would want at least $340 out of it. So if I wait 10 years and something drastic with platinum happens and the price goes down and this is worth less than $340, I might say, what else do I have that I could sell? Is gold up? Is silver up? Are my stocks up? Is land that I may own up? Whatever, right? I may want to look at a different thing that I purchased over time to see whether or not it's worth getting out of versus platinum. Because you never want to take a loss if you can help it, right? Now, obviously, emergencies happen and things happen in life, and sometimes you got to take that loss, and it's not fun, but it is what it is. But trying to time the market perfectly is never a game you want to play, because more likely than not, you're just going to end up very, very disappointed. A prime example of this, if y'all watch the stock market at all, you've heard of this little company called Nvidia. NVDA, or I don't know how you spell Nvidia, Nivida, what have you. But NVDA is the stock ticker symbol, and this is the chart as you can see. Crazy growth in a short amount of time. People sold, people made money, people got out. But I want to mention that I've even known people that have lost a little bit of money selling at the wrong time, right? Had they sold a few weeks before, they would have been up higher. Had they sold a few weeks after, they would have been up higher. But since they sold when they did, it was actually down a little bit and they lost a little bit of money. So even though you see crazy growth, the people that are doing the day-to-day flips, they might actually be losing money, while other people who have just held the entire time that the chart has been going have actually only just made money over time because they've never taken that realized gain or realized loss. Okay? So when it comes to platinum, stacking it, you should be doing it with a mindset of, I need to spend as much time as I can in the market, because overall the chances of me benefiting are much higher spending more time than it is trying to specifically time the market to a T and perfectly tell when I should get in and out and all that stuff. You're just going to end up with a headache at the end of the day and maybe even a little bit of disappointment. Now, that's not to say that people haven't made profits. Obviously, they have. I'm sure somebody watching this video has and will mention it down below. And some people will also take a look at Platinum's more recent chart, which I'll show you all right now, of just not going up or down or doing anything for a realistically sort of long time period, right? It's been a little while since Platinum's done much of anything, and that can be a little bit discouraging, and that can kind of go against what the video is talking about today, which is time in the market's better than timing the market. You might even tell yourself, hey, you know, it might be better to buy Platinum, sell it when it moves 100 up, buy when it's 100 down, sell when it's 100 up, and just make money that way. I mean, I suppose you could, but I reckon you'd be better off just trading paper shares at that point. So, with all that being said, the chances of you benefiting from holding Platinum slowly go up as time goes on. You want to keep maybe a written record, maybe just know when you stop stacking Platinum what you spent for it, sub 1,000, sub 1,100, and when spot price is above that number, you know you're not taking any loss. I don't track prices that much on what I spent, but I know roughly where I spent the money at, right? All my silver right now, I know I didn't spend more than 30 bucks an ounce on. All my platinum, I haven't spent more than, well, y'all know my limit of $1,500 with premium. So if platinum ever breaks above that, maybe I stop stacking it and just hold, and I know I'm up. Regardless, once again, time in the market is much better than trying to time the market perfectly. So when it comes to buying platinum, don't just buy it, watch it go up a little bit and sell it and just try to make that profit. I mean, you could do that if you want, but you might end up regretting it later on down the line. So with all that being said, I appreciate everyone for stopping by and checking out the video today. Be sure to hit the like button on your way out, hit that subscribe button so you can always stay up to date with future updates on the Platinum Beast channel. With all that being said, until next time, we'll see y'all.